and welcome to BizTech's Midday Market Watch. Our guest today is Vishnu Varathan. He's the Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, great to have you on the show.
Thank you for having me, Brian. Good to be here. How are you?
I'm good, thank you. Now, Vishnu, before we get your insights, let's take a look at what's happening across the region in markets. If we look at it's pretty mixed around the region. We've got the Nikkei that's down slightly at 0.16% at 26,757.12. Shanghai Composite is down slightly as well, 0.09% at 3,446.19. The Hang Seng is up 0.56% at 26,682.16. The ASX 200 is up 0.43% at 6,618.50, and the KOSPI is up 0.03% at 2,676.57. Now, overall, closer to home, Bursa Malaysia is trading at 1,611.06. It's up 0.77%. And the SGX is trading at 2,813.92. It's up slightly at 0.11%. So Vishnu, looking at the markets this morning, what are your thoughts on this?
I think markets are now at a juncture where they're taking a pause. So they've priced in quite a bit of the good news and the hopes of the vaccine. But equally, I think markets are also trying to take into account the fact that US Treasury yields are higher, which means the opportunity cost of investing in EM Asia or the emerging part of the world is also higher. And I think they're also waiting to ride out some of the uncertainties that come along. And I think the two things that markets may be watching now may be the Opec meeting, as well as what happens with the US fiscal stimulus. So this time of I think the week, markets are taking a bit of a breather, which is why we see a little bit of a mixed bag depending on the focus.
Okay, can I ask you, and let's zoom into the Treasury yield now. What's causing the rise, and what's your 12-month view on US Treasury yields?
Right. So for us, I think right now we can tell that the rise in yields is coming through partly as a byproduct of vaccine optimism. The sense is that if markets are optimistic about the vaccines come through, then you get demand recovery, which in turn then leads to some upside in yields just from extra demand. And also, I think equally, they're also applying this story to fiscal stimulus coming through in the US. If fiscal stimulus comes through, then you get consumers being able to spend. You don't get that kind of fiscal air pockets. And so the rise in yields is actually premised on good news. Nevertheless, I think this is where markets weigh off so as to assess whether higher yields is going to begin to take some of the allure of EM assets or not. Our view on yields as we go forward is we expect yields to rise, but I think this is where we want to draw the distinction, and it really depends on what pans out. As insofar that the Fed is committed to their flexible average inflation targeting, it means that they will not be hiking rates anytime soon. In fact, they don't see themselves doing it till 2023 earliest. That means that your 10-year yields are probably going to be somewhat more dampened than the demand triggers coming through. So the sensitivity to demand triggers is going to be dampened, whereas inflation expectations, what you might call the break-even or the 5-year swaps, this may rise faster. So the interesting thing to see is which one overtakes the other, and whether real US Treasury yields remain low or go even lower. If so, it may support a weak dollar sentiment as well as some buoyancy for emerging markets. So that's really what we need to watch. We haven't really watched this movie before because the flexible average inflation targeting is a new release, isn't it?
Yes, it is. Now, moving on to what you also mentioned earlier, the meeting today with OPEC Plus. Now, the market expectation is that they would hold on to existing production cuts. Now, what's your view on the possible outcomes of this meeting and therefore the impact of oil prices in 2021?
I mean, that's really a good question, Brian. And I think, what goes on behind closed doors is somewhat more nuanced and complex. So we can take a step back. And there are two camps, essentially. One camp is the one that anyone can sympathize with, the one that's hurting really bad from the imposed production cuts. They need this to come through for fiscal revenues. They need this to come through for, for the dollars that they need. And so they
Yes.
want to get back to production. The other side of the market is one that's taking a slightly bigger view and worried about the fragility around the market and saying that if we suddenly put in more supply there, oil prices could be destabilized beyond the supply impact. So it could start a negative dynamic. So
Yeah,
the
because essentially
yeah,
the underlying demand is still not very strong.
absolutely. In fact, I think we got carried away a bit because we take a few days back, oil prices had a nice rally coming through since the vaccine good news came through. But this is, of course, based on projected demand. And I think that's where the more conservative voices in OPEC Plus are saying, hang on, it's still a very fragile market. It's very tentative, and they don't want to get ahead of themselves. In terms of a compromise, and the easy thing to say is the compromise that perhaps works is to say, yes, we will, reinstate production as discussed, but let's phase this in rather than resuming in January. It may be phased in over into the first half of next year, or the whole of next year, depending on which side makes I think shriller demands. We did see the talks sort of falling through on Monday, so there are certainly tensions for us to watch. Oil market outlook is a tricky one because OPEC is one where supply comes back on board, which means that whatever demand uplift that comes through, this is going to water it down.
Yes.
The other aspect of it is we also must bear in mind that shale will also respond to rising demand. So when shale
Correct.
expands, which is what I think the more conservative voices in OPEC are quite worried about.
And so this is where you and I are in agreement, Vishnu, because oil market bulls like Morgan Stanley have predicted oil prices would be at $65 this time next year. But my hypothesis is the same as yours. That's where the shale boys can make a lot of money at that time. So when you pass a consistent 50 plus, it's already financially viable for them to be producing. So that would add as a dampener to oil prices.
Absolutely. In fact, the more efficient guys can produce very easily at $40. So we already see that. So it's really the marginal rigs who have got higher production costs who will really start coming in. And the bigger question is this: we could see $65. I don't want to talk that down because if the vaccine proves to be, as successful as the results, the initial results are, then the pent-up demand for travel, so on and so forth, could catch people on short stocks. So that can always cause a squeeze. But the
Yep.
real question is whether it can endure at these levels and have an upward trend. That is where I'm far more circumspect. I think the rebalancing would be such that it will be difficult for oil to carry on rallying through, and there will be some air pockets in between, given there's still a significant amount of uncertainty around this recovery.
Now, Vishnu, final question. It's the last month of the year. What are you advising your clients to do for the rest of the year?
Well, I know in our view, we initially thought that the end of the year could turn out to be a very volatile period post-election. Right now, it's still quite hard to say, but so far the developments suggest a fairly non-eventful handover, not your usual handover, but a non-eventful handover. Nevertheless, there are still a lot of unknowns. So equity markets have already gained quite a bit globally. So I think the sense is to, conservatively take profits where possible. But also, this is hard to put out this uncovered, piece of advice, mainly because typically markets tend to rally through December, January, if you get the Santa effect coming through. And to sit out of it, I think could be painful for some investors who want to not start the year on the back foot. So it's really being very nimble and being very cautious about higher volatility is really to protect against the volatility around it.
So you foresee still more volatility than usual for the month of December?
Yes, and by the very nature of it, whether it's December or January, we do expect that the volatility could come about from unexpected avenues, and one possible one could be U.S. Treasury yields. If indeed yields get ahead of the break evens, causing real yields to rise, that could easily take some wind out of equities and emerging markets. So this is something we want to be careful of, because we don't know how this will play out under the current monetary policy regime and the vaccine interaction. So the interaction between these two is hard to predict.
Vishnu, thank you very much for your insights and your time. We've been speaking to Vishnu Varathan, the Head of Economics and Strategy at Mizuho Bank, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.
Thank you, Brian.